Hello, I'm Donald Leggett and welcome to Share Views, brought to you by the financial website London South East. Today I'm joined by independent oil analyst Barney Gray, who works for Turner Pope and Optiva Securities amongst others. We'll be looking at AIM-listed oil companies making the news, and those are Coro Energy, Rose Petroleum and United Oil and Gas. So if you hold those stocks, listen in. Barney.
Hello, Donald.
It's good to see you.
And you.
How's life with you, Barney?
Very good, thanks. Very busy.
Okay, so some big news. Fracking is going to be banned in the UK. There's a moratorium on fracking going to be introduced into the UK. How significant is that?
It's significant, and it's certainly a milestone in the UK onshore sector. But I'm of the belief that it wasn't unexpected at all. If you kind of look at some of the news flow from these small oil and gas companies over the last 12 months, 2 years even, you'll see that they were at real pains to say that they were not engaging in fracture stimulation of reservoirs or wells. It was something that they were at pains to point out. So I think a lot of companies were prepared for this, and it shows in some of the recent activity that you've seen in the UK. It's changed things, but the companies have made a big issue of it doesn't change things, if you know what I mean.
But does onshore oil and gas production have a future in the UK?
I think it most certainly does. Remember, it's not a huge sector in terms of UK output when you consider the offshore in particular. But there's enough going on. It's a nice little sideshow in many respects. But you've got some big wells having gone down in the last few years, and I would point to look at the West Newton discovery up in Lincolnshire. That's could be a major discovery. To say that the onshore sector is over is not true at all.
And no fracking involved with West Newton?
Very clearly, yes, it's a conventional reservoir, oil and gas, and I think you'll find a lot of the major activity that you've seen recently. Biscathorpe was another one that was drilled early this year. More work to do on that, but it's conventional, and I don't think the conventional sector is going to be stopped.
Okay, but we've actually got you in to talk about your research. Coro Energy, South East Energy. It's an explorer and a producer, oil and gas. It does lots of gas. Sum it up for me.
Well, Coro are pushing ahead now with this Southeast Asian strategy, a major focus on gas, as you've rightly pointed out. And what's very interesting about Coro at the moment is that they're drilling a back-to-back program in the offshore Indonesian sector. They've drilled the Tambak 2 well already, and I think they spudded earlier this week the Tambak 1. They've done them in that order. And so there has been plenty of news flow, and you should see a lot more over the next month or so.
Tambak 2, interestingly, there were lots of good news, but they didn't quite get the flow test, the DST.
Yes, but the background to Tambak 2 is important. It was a major step out appraisal well. It was a long way in terms of distance from the original discovery well, and all the data, the logs and the coring showed them what they wanted to see, that the reservoir is exactly as they'd hoped there. Yes, there was a drill stem test, which I think they had 2 attempts at it, and it wasn't successful. I think there was a gas kick, and the mud to control it damaged the reservoir. But I think if that had tested, that would have comfortably done 10 million cubic feet a day and confirmed that the reservoir is indeed, of that aerial extent.
But I understand that the Tambak 2 was going to be plugged anyway, plugged and abandoned
Precisely,
anyway.
Yes. I mean, this would have been a problem had it been, held as a development well for the future, because these wells aren't cheap. But it was to be plugged and abandoned anyway. So, the well would have delivered what they expected.
My big question: why do you plan to plug and abandon rather than turn that into a drilling well?
Yeah, well, appraisal wells are exactly as it says on the tin. They're there to appraise, and these wells, as I mentioned before, was over 13 kilometres step out from the original well. What it did confirm is that this is as a reservoir, it's a big reservoir.
It's a mighty big reservoir.
Well, the aerial extent is big, and that's what it's demonstrated. And a second appraisal well will add to that body of information.
So next news flow coming up: Tambak 1 spudded recently. 30-day well, is it?
33 days, which is very specific. But
well done,
yes,
Barney.
Yeah, well, that's
that's what you're here for.
That one's very interesting. Again, it's appraising it's the Mako gas field. It's appraising, and we hope for no unpleasant surprises. I think that will be very interesting. But it's also pushing on to a deeper reservoir, which could, if it comes in, potentially double the original resource estimates for the Mako field. Now that's got about a 1 in 4 chance. So that would be lovely icing on the cake, but it's a two objective strategy, this well. So you'll get the appraisal well of the existing reservoir, which they know is there, and hopefully some major upside with the deeper prospect.
Coro today is Indonesia. Coro tomorrow might be Malaysia. James Menzies recently was talking about the big boys pulling out of Malaysia and him being very interested in potentially as a smaller, more nimble, a more cost-effective operator to move into Malaysia. What do you think about that as a future strategy for Coro?
Yeah, it's a very natural strategy. Indonesia and Malaysia, I think, are key in terms of. I think the centre of gravity of the global economy is most definitely shifting towards Southeast Asia. And you've got the Singapore gas market, not the only gas market benchmark, but a major one, probably the major one. And so it makes sense to pick up some of this gas exploration acreage that is prevalent in Malaysia and other countries, as we've seen.
So that's not a bad summary for Coro. They're in the right place at the right time.
Undoubtedly.
Okay, Rose Petroleum. I know nothing about Rose Petroleum, but perhaps I ought to. So explain to me why they're raising 1.25 million at the moment and what their corporate strategy is.
Yeah, well, Rose have got a new strategy to develop what they've already got in terms of where they're focusing. They were originally, they still are, in the Paradox Basin in Utah, and what they've done is formulate a wider Rocky Mountain strategy. So that includes assets in in Colorado and potentially Wyoming in terms of a strategic focus on that region. And what they've done is they've agreed a strategy to establish a pipeline of maybe smaller bite-sized acquisitions which are closer to production and therefore cash flow. So they're not as chunky as maybe the Paradox Basin is, but they'll bring the company to a stage of development which could produce some early production and therefore cash flow to fund future activities.
So the Paradox Basin in Utah is a sort of more medium-term play, and what they're trying to do is push things forward a wee bit and get some revenues on board and get some oil production on board. And Colorado is where that starts.
Yes. What they've done is they've taken a 10% interest in a company which has a major interest in the Mako lease, which is a relatively small lease. But what they're planning to do is build a wider acreage position and then establish a 12-well drilling program. That's for starters. On this acreage, potentially targeting, by my calculations, over 10 million barrels of oil. Now, Rose's ultimate percentage will be relatively small, about 2.2, but they have an option to increase that to nearer 20%. And there's also the ability to drill up to 26 wells on this still a relatively small patch of acreage, but accessing potentially large resources. So they can grow that from there and potentially grow other acquisitions along the same lines.
And the 1.25 million has been raised, or is it being raised? That's
been raised, yes. It's in 2 tranches. The second tranche will go to a GM because they need the shareholder permission for the additional shares, but that's on the 21st of November, so you should be looking out for an announcement around about that time. And then they've got some early capitalisation. And at the same time, the Paradox Basin remains very much a core asset. It's a larger asset, but they've focused down much more acutely on a smaller acreage of a smaller piece of acreage in the Paradox, which is where the 3D seismic information concentrated on. They've reduced their leasing costs there as well, and they've changed the structure of the deal, so it's not an earn-in anymore. They actually hold a percentage of that. So if they can secure a farming partner at some point, because these are relatively expensive wells, 7 to 8 million, you've got something potentially considerably bigger for the future.
So the new management team seem to have their strategy spot on, yes?
Yes, it's something that...
It's sensible.
Yes, I make it sound like they formulated this very recently, but this has been going on for, the best part of 12 months, and I think now we're starting to see the actual fruits of it quite clearly.
Okay, so Rose Petroleum, a name to look out for. United Our third and final company is United Oil and Gas. So if you could sum up UOG for us and who they are and what they do.
Yes, well, United is a junior E&P company. They've got quite a broad suite of assets, and they initially started in the UK onshore. You know, another major player there. They've got Italian assets, which the Selva gas field, which could come on stream in 2020. And they've also built some very exciting longer-term exploration, Jamaica in particular, but also got some assets, some option on assets in Benin. And they've picked up some assets in the UK 31st licensing. But I think you probably want to talk about the Egyptian acquisition.
I do. They're buying Rockhopper's Egyptian assets for $16 million. Relative to everything else, that's a significant chunk of assets.
Yes, indeed. It's classified as a reverse takeover, so the shares have been suspended while the deal completes. Yes.
Let's just ask you, so what should shareholders do?
Just wait. It's all taking place. They said they would complete this deal in the fourth quarter, and we've got plenty of time to go. It's all progressing. They've got they announced, I think, a little while back that no one was going to preempt them. So they've got they're just dotting the I's and crossing the T's on this.
Okay. Interesting. So Rockhopper are selling the asset.
Yes.
United are buying the asset. Why are Rockhopper selling? What do United get?
Well, Rockhopper stated at the time that they need to focus and want to focus more on the sea lion development, which is obviously going to take a lot of time and resources of still a relatively small oil company. And
sea lion is in the Falklands.
Yes. Now that's obviously a major development. And Egypt is, well, by dint of being sold to United, was deemed non-core, and a perfect acquisition for a company like United to grow scale quite quickly.
So why is Egypt an interesting asset?
Well,
why is it a good asset to buy?
It's going to give United some immediate production, and you know I think it's very attractive. You've got net production of over 1,100 barrels of oil equivalent a day. Net to United's 22%, as you said before. Now that's producing as we speak now,
so it gives them an instant revenue stream.
It does, and it gives them interest in a drilling program as well. The transaction is backdated to the 1st of January 2019, so they will get the benefit of the increase in production over the course of this year. There's been 3 wells, I believe, drilled to date, with a 4th on the drilling program, and potentially another 4 drilled next year. So, you know, you've got an exciting drilling program, you've got existing production, and you move hopefully into the next tier of oil and gas companies with acquiring scale at a very good price.
And they also have a big player in there. One of the majors is in there. BP are in there.
Yeah.
So what role do BP play? And what happens with BP?
Yeah, I mean, as you said before, the $16 million acquisition fee, BP are providing $8 million of that in terms of finance. So that can be repaid out of production once United take over their interest.
Great move. So BP actually pay the $8 million, and then through current production you pay it back.
Yeah,
that's a good deal.
I totally agree.
Okay, where did they get the other $8 million from?
Oh, that's in terms of the acquisition price to Rockhopper. I think $5 million is going to be in shares, and the rest from cash resources. So there's a dilutive effect, obviously, but it's a very well structured deal, and it doesn't use up too much of the company's existing cash resources.
Barney Gray, thank you very much indeed for joining us today. And if you'd like to see Andy Dennin, CFO at Coro, in person, he'll be speaking at our oil and gas investor briefing on the 12th of November at Brewers Hall in the City of London. We would love to see you there. Thank you very much for listening.